Making personal after-tax super contributions may be a smart way to reduce tax now and grow your super tomorrow. But how does it work? Let's walk you through some fast facts to get you up to speed. Firstly, what are personal contributions? Basically, it's any after-tax money you pay into your Q Super account, like with, say, a bank transfer or BPay. So next, you're probably wondering how paying more into your super may help save you at tax time. The short answer is by claiming those personal contributions as a tax deduction, if you're eligible. Let's break down how that works. Let's say you've made a personal after-tax contribution and you're eligible to claim it as a tax deduction. When you do that, this contribution may be subject to a 15% contributions tax. You get to claim the full contribution amount as a tax deduction though. So provided your marginal tax rate more than 15%, which it is for most taxpayers, you may end up paying less tax. Here's an example. Let's say you earn a salary of $80,000 a year. You decide to make a voluntary after-tax contribution of $10,000. Subtract 15% contribution tax, and you're left with an $8,500 super contribution. You can now claim a tax deduction of $10,000 in your tax return, reducing your taxable income to $70,000 a year. This is where it gets interesting. With a marginal tax rate of 34.5%, after claiming the deduction, you'll pay $3,450 less in tax. Even with the $1,500 tax that was taken from your super contribution, you still come out in front. The result? You boosted your super and saved a tidy sum on income tax. Nice one. Before you rush out and do this, check your marginal tax rate on the ATO website. Now, while this might be sounding great, it's important to understand there are contribution limits. When you claim contributions as a tax deduction, they count towards your yearly concessional contributions cap. Your employer and any salary sacrifice contributions also make up this cap, so be sure to factor this in when working out how much you want to claim. Okay, so you think you're ready to claim a deduction? Here's how to do it. First, you need to make a personal after-tax contribution to your Q Super accumulation account before June 30. Complete the Notice of Intent to Claim or Vary a Deduction for Personal Contributions form. Next, you'll receive the acknowledgement of your Notice of Intent to Claim a Deduction. This notice must be provided before the lodgement of your tax return or before the end of next financial year. And finally, lodge your tax return, stating the amount you're claiming in the supplementary section of your return. You can find out more about eligibility to claim and the process on our website, or give us a call.